So you want to make money in the stock market. Today I'm going to be talking about ways that you can actually make money in the stock market. Now, I know what you guys may be saying. Well, Eli, that's easy. All you got to do is buy low and sell high. I mean, there's nothing else to explain about that. Well, yeah, that may be true, but there's other ways to make money in the stock market as well. And that's what we're going to be talking about in today's video. And hold your horses because we're starting now. If you guys love to talk about personal finance and mindset, you guys want to help support the Urban Lifestyle channel, starting out by actually hitting the thumbs up is highly appreciated, and make sure you guys subscribe to the channel if you haven't already. Hit that notification icon so you guys get future notifications of my future videos, and make sure you guys comment your thoughts down in the comments below. Are you guys making money in the stock market? Comment down below, let me know. Now, while some people may hear about the stock market and say, well, that thing there's a scam, Eli. I know a friend who has a sister who has an uncle who has a grandma who lost the sock in the stock market. And some other folks may look at the stock market and see a beautiful way to gain riches. Now, while there's tons of other ways to make money in the stock market, on today's video, I want to focus on 4 main ways. And the reason I'm focusing on these 4 is because these are ways that I actually use to make money on the stock market. Now, before we get started, I do want to let it be known that it's good to always do your own research and not just blindly follow somebody on YouTube. And that's simply because I am not a financial advisor. So don't take any advice from me. So now that all that is out the way, let's go into one of the first ways you guys can actually make money within the stock market, and that is buying and holding. And yet this is the most simple and effective way to actually make money within stocks. Pretty much everyone and their mom should know about this strategy. It's pretty much when you buy a stock and you just hold it. And when the stock price rises, you sell it. And then you get that sweet profit. Now, of course, this is easier said than done because it doesn't work like that in real life for real. Sometimes you can buy a stock and you're expecting it to go up, and then all of a sudden, it just goes down and down and down and down. I actually have a stock that I'm actually holding for the long term that I'm actually down 25% on. But I've done my research and I do believe in the fundamentals of the company. And I believe within the next 3 to 5 years, that stock will be way higher than it was when I initially bought it at. Now, remember, this strategy is heavily based on the research that you put into the company's stock. This is not where you're like, oh yes, AMC and GameStop is going up, let's just throw a whole bunch of money into them. You want to do your research into the company because you really don't want to put your own hard-earned cash into something and then you lose money, and then you're one of the people that says, I know a friend who has a sister who has an uncle who has a grandma who lost the sock in the stock market. While every investment do come with a risk on its price tag, it's up to you to make sure you do your research and make a calculated risk assessment. And now we move on to the second way you guys can make money within the stock market, and that's dividends. Now, this one is the most easiest because you really don't have to do anything. Besides do your research, of course. So after you do your research on a company and you find a great, amazing company that you can then purchase shares in, and you find out that that stock pays dividends, just for holding shares within that company's stock, that company will then pay you dividends. Now, not all companies are the same when it comes to paying dividends. Some companies may pay yearly, some companies may pay every 3 months, and some companies will pay you monthly. And also, some companies may pay you between 1 to 3% yearly on dividends. Now, of course, I've seen some companies that pays up to 4% yearly dividends, and I've also seen companies that actually pays 11% yearly dividends. Now, just because they're paying more in dividends doesn't mean that they're a great company. Now, generally, what I look for is a company that actually has profit and can afford to actually pay out dividends. In a much smaller scale, if a company's only making $10 in profit and they're paying their shareholders $11 in dividends, they're practically giving all their money away and they cannot invest right back into the company. So it's always good to look at a company's payout ratio and do they have the income to actually sustain that dividend. Now, the third way that I've used to actually make money within the stock market is selling covered call options. Now, this is where we get into the more complicated way of making money within the stock market. But if you know what you're doing, it may just actually work out in your favor. It's supposed to be faster than that. When you're selling a call option, you're actually selling the right, but not the obligation, to someone else to purchase an underlying asset by a certain date. The seller, which is you, would actually get paid a premium for agreeing to deliver the underlying security for a preset price before a set date if the buyer demands it. So pretty much if all you heard was blah, 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 allow me to dumb it down for you. The way options work is with contracts. One contract represents 100 shares of the underlying company stock. So if I want to sell one call option on Apple, that technically means I have 100 shares of Apple that I'm willing to sell to somebody at a certain price at a certain date. So for simplicity, let's just say Apple's share price is at $100. And I don't believe that it's gonna be at $110 by the end of this month. But hey, you believe that it's gonna be way beyond that by the end of this month. Now I'm gonna place a bet against my 100 shares of Apple saying that, hey, I don't believe that it's gonna be at this price by this specific time. I write one contract up, which represent 100 shares of the underlying company, in this case being Apple. As somebody who believes that Apple's gonna be above $110 by the end of the month, go ahead and pay me a premium for my contract. So the premiums that that person paid just automatically goes into my account and I get to keep it. Now the only risk I'm actually taking is if Apple do goes to $110 by the end of the month, that person gets to exercise his right to buy my shares at $110. So I have to sell 100 shares of Apple at $110. Now it doesn't really look like I'm losing, right? Because I get to keep the premiums and at the same time I sold the shares for $10 higher than they are right now. Now where the risk comes in, let's say Apple has an earning call or they just released the iPhone XS Gold or whatever it may be, and that stock just soar past $100 and goes to $200 by the end of the month. Now if the person who bought the covered call from me exercised his right to actually purchase my shares, I would have to sell him my shares of Apple that is currently $200 at the agreed upon price of $110. So technically, I would be forced to sell a stock that's worth $200 at the price of $110. But remember, I still got to keep the premium and at the same time, I got to sold the shares at a higher price than I bought in the first place. But then I did lose all that potential profit that I would have gained had I just kept the shares in the first place. Now, hopefully all that made sense because I actually just gave it a bird's eye view. It gets a little bit more in details with it. So make sure you guys definitely do your own research and search up covered call options. And we go into the last way I like to make money within the stock market, and that is selling put options. Now this one gets complicated as well, but it's sort of like the last one. Now I like to use this strategy when I plan on buying a stock. So when you're selling a put option, you are agreeing to buying the underlying stock at an agreed upon price. So for an example, and to keep it simple, let's say Apple is trading at $100. And I'm very interested in buying Apple, but I believe that I can get it at a lower price. So I would sell a put option saying that, hey, you know what? I would want to buy this stock if it goes down to $80 by an agreed upon price. And somebody else would see that and be like, okay, hey, cool. I would pay you a premium. So just in case, if that stock do go below $80, you are agreeing to buy this one contract from me. And remember, one contract means 100 shares. So that person would pay me if that stock goes at or below $80, that he gets to exercise his right to sell it to me for $80. So what do I get in this situation? I get to keep the premiums, and if I want to buy shares of Apple and it goes to $80, I get to buy it for $80 if he decides to sell it to me. Now the only downfall is if Apple drops to $60 and he decides to exercise his right to sell it to me, I would have to buy shares of Apple that is worth $60 at $80. But the downfall is if Apple goes to $1 per share, I have to buy those shares at the agreed upon price of $80. So there are risks to everything. You just have to make sure you do your own research and make sure you make a calculated decision and analyze the risk to see if it's worth it or not. But that's pretty much the 4 ways that I like to make money within the stock market. Yes, I know there's tons of other ways to make money, such as shorting, but that's not something that I actually do, and I can't talk about stuff that I don't do. But that's pretty much all I have for you guys today. Thank you guys so much for watching. If you guys found value in this video, please hit that thumbs up. It's highly appreciated. And looking at the clock right here, it shows that I've been recording this video for 43 minutes, and wow, there's gonna be a lot of editing to do. So make sure you guys hit that thumbs up, subscribe to the channel if you haven't already. Make sure you guys hit that notification icon so you guys get future notifications of my future videos. You guys can find me here every Monday and every Friday if I'm not lazy, sometimes on Wednesdays. Thank you guys so much for watching and have a beautiful day. Well, Eli, that's easy. Okay, all right, tried it. Well, Eli, that's easy. No, okay. Well, Eli, that's easy. All you gotta do is buy low and sell high. Okay, I was touching my beard. Okay, all right. So before we begin, first thing first, let's get makeup right. How do I look? Make sure the hair waves in front. There you go. I'm ready for my close-up. I am the stock man. I am the stock man. This beard is very itchy. Well, of course, yeah, that's true, but there are many other ways that you guys can make money in the stock market. Okay. I know a friend who knows a friend who knows a friend who knows a friend who has a sister, who has a dad, who has a brother, who has a son, who has a daughter, who has a grandma, who has a sister, who has a I lost it. Oh, Grandpa Eli right here, about to hop in this booth real quick and spit my energy into this video. Now, one thing I don't want to come across in this video is to make it seem like it was easy. A lot of this takes work. There's a lot of research that goes into it. It actually takes like maybe a whole week before I actually buy one of my stocks. It actually took me a whole month to do a research. It's a lot of hard work, especially finding a good dividend stock that's gonna last me for the next 5, 10, even 20 years. And if it came off in this video like, hey, it is easy, I'm sorry, but it's not.